housing makes up the biggest portion of the calculation for inflation. So if inflation is high, it means the cost of real estate is going up, and usually your values are going up as well.
Hey everyone. So recently, lots of investors have been asking me if it's best to move their funds over from the stock market to real estate investing. Drew, what are your thoughts on the debate that's raging on between stock market versus real estate investing?
Yeah, David, this is the classic conversation. For my money, I'm a big believer in real estate. I'll give you 4 reasons why. Number 1, better returns. Number 2, cash flow. 3, tax advantages. And number 4, strong inflation hedge. So the average return in the stock market over the last 15 years has been about 15% annually. Now, this doesn't include taxes, fees, distributions, or inflation. Syndications, on the other hand, routinely deliver double-digit returns. On top of that, syndications, because of the depreciation and cost segregation benefits, have huge tax advantages. And then finally, real estate is a fantastic inflation hedge, mainly because housing makes up the biggest portion of the calculation for inflation. So if inflation is high, it means the cost of real estate is going up, and usually your values are going up as well. So for those reasons, I'm a big believer in real estate.
Yeah, so going back to those tax benefits you mentioned, that's definitely one of the most beneficial aspects of investing in real estate. Can investors reap those benefits through investing with Nighthawk, for instance?
Yeah, 100%. So everyone's situation is unique, right? But on all the deals that we do, we order and get a cost segregation analysis, which creates this big opportunity for bonus depreciation. Essentially, go reach into the future and take all that depreciation today and get this huge tax benefit from it. So each deal is different, but we've been able to capture tax losses of 50 to 80% of an investor's money in the first year of their investment.
So another aspect that people talk about a lot is that real estate investing is more recession resistant than stocks. Can you elaborate a little bit on what people mean by that?
Yeah, absolutely. Right. So let's just set the stage first. In the 2008 recession, we saw stocks lose about half of their value, 50%. Just imagine losing half of your invested dollars. And then in the wake of COVID, we saw them go down by a third, by 34%. With real estate investing, you tend to have more consistency. Number 1, you're in a very consistent, sort of boring asset class. Housing, and we work in B-class housing, where rents go up by a little bit every single month. This is not a discretionary asset class. People need to have housing. So there's greater consistency in the exact dynamics of the industry that you're investing in. So for instance, someone might lose their job in a recession, but if they lose their job, they still need a place to live. They might downgrade from a class A to a class B to class C, but there always is going to be that demand for housing. That is what makes it more resistant in our perspective.
All right. Thanks so much, Drew. And thanks for everyone for tuning in. In order to learn a little bit more about the benefits of real estate investing, feel free to book a call on my calendar by visiting nighthawkequity.com/join. And we'll catch you on the next video.